If you are constantly lost in the trend, you're confused on how to navigate throughout time frames, and you're losing trade after trade and never finding a winning streak, then make sure you watch this video all the way up until the end, because I am going to be giving you a free course on top-down analysis. And why should you listen to me? Because you can see my students here on the right hand side successfully using this knowledge to pass their accounts and to get trades on a day-to-day basis and get some wins. Now, before we get into today's video, I just want to quickly mention and announce that I am now launching my SM2 trading software and my Get Funded Now program. This has been something in the works for a long time and it has finally been released. You can see what we do is we get you funded and we automate your profits, or you don't pay a single penny, and this is guaranteed through our contract. You can see our clients such as Pierre and our other clients who have successful metrics, payout certificates, and their certificates over here for FTMO. So if you are interested, make sure you go to the first link in the description, check out our fully functioning website with our contract and apply here so you can get started and you can get funded, or you don't pay a single penny. But without further ado, let's get right into today's video. Alright, so what exactly is top-down analysis? Top-down time frame analysis in technical trading refers to the process of examining price action across multiple different time frames, starting from a higher time frame and progressively narrowing down to the lower time frames. This approach helps traders align short-term trades with broader trend and market context. So essentially, top-down analysis is when you go on a higher time frame, analyze the market, understand what's going on a higher time frame, which is going to aid us on the middle time frame, and that analysis on the middle time frame is going to aid us in our entries on the lower time frame. So it's essentially what it says. It's starting from the top and going on your way down in logical steps to find the best entries and the best analysis. So take a look at this example here. Every single thing that I've got here represents a time frame. So let's say I do some analysis on the daily time frame. I will then jump to the 4-hour time frame. And then from the 4-hour time frame, I will then jump to the 1-hour time frame and do my analysis. And on the same thing, I go from the 1-hour time frame to the 15-minute time frame and I do my analysis over there. And then I move on to the 3-minute time frame and I look for my entry and my trade execution. You can see what we have here is a gradual process where we gather information from every single time frame. It's significant that we grab information from this time frame, and every single other time frame to make sure that our trade is the best possible trade it can be. Now, the reason why it's important to gather information from all kind of time frames for one single trade is because the market is controlled by all of these different time frames, right? When we look at the 3-minute, we might see that there's a downtrend, but on the one day it might be an uptrend. Then somewhere on the 1 hour it could be a consolidation where we're moving from side to side. So what you need to understand is, no matter what time frame you're trading, all of these time frames are going to be producing an amount of information which we need to take into account before we can move on to a lower time frame. So for example, if on the 1 day we can see that price is very bullish and it just hit a point where we can expect a reversal, then even if all of these other time frames are also bullish, then we have to keep in mind that the 1 day hit a point where we might be bearish, so our bias for the rest of these time frames will change. So that's just a small insight as to how top-down analysis is useful. A way which we shouldn't be doing top-down analysis is where we make big jumps in between the time frames, and so the information from this time frame isn't completely relevant to this time frame. So what do I mean by that? If we're analyzing on the daily time frame, literally each candle represents 1 day. So all of that information on the daily time frame, we need to break down, we need to understand. If we make a huge jump from the information we had on the daily all the way down to the 15-minute, not everything from here is going to be relevant to the 15-minute, because the 15-minute time frame is a much smaller time frame, and we missed out on all of the time frames in between, which would have also gave us some useful information about the trend and market structure, change of characters, breaker structures, supply and demand. All of that useful information we just skipped because we took too big of a jump. So our thought process should be in more logical steps and in small steps. So for example, from the daily to the 4 hour to the 1 hour to the 15 minute to the 3 minute, instead of from the daily to the 15 minute, then from the 15 minute straight to the 3 minute, right? We need to structure our top-down analysis in a way where we're using multiple time frames to understand as much information as possible so that our trade can be to the best we can get it to. So what does each time frame represent? Because we were talking a lot about these time frames, but how do we know what time frame we use for what and what information we need to get out of what time frame? So each time frame has its own purpose and has its own use. So the higher time frame, such as the 1 week, the daily, or the 12-hour, has the use of understanding our directional bias. What does this mean? So for example, if we on the 1 week, let's just say on the daily time frame, so let's say on the daily time frame, so 1 day, we see that price was previously bullish, and then recently we tapped into a previous daily level of supply. That means on the daily time frame, we can say we have a potential to be bearish. So our directional bias for the coming days and the coming weeks to take any trades will be sells, because we can see on a daily time frame that because we recently tapped into this supply zone, our trend may change from bullish to bearish, and therefore our directional bias has switched to bearish. And that means when I go onto the lower time frames, I need to keep in mind that the higher time frame has switched to being bearish. Another example, let's say on the daily time frame, price is bearish, right? And we just had a little bit of an up move, and then it came into a continuation zone on the daily time frame, and we can see that price has tapped into supply on the daily time frame. What does this mean? Does this mean we're still part of this small push up? No, we're going to be continuing the downtrend. So again, that means our directional bias will be selling. So now I'm going to take this information and keep it with me as I move on to these smaller time frames. So this directional bias you can literally write down. So if I'm analyzing Euro USD on a Monday morning and I see that the daily time frame was telling me that our directional bias was sells, I'm literally going to write down on the right hand side of my screen that I should be keeping in mind that on the 1 day our bias is sells. And this is going to help us so much when it comes to our trading, because it means we won't get confused with what the lower time frames are telling us, because we might then move to the 15-minute and it might be a very bullish trend, right? But we know that because the daily was telling us sells, we have to take this information into account, and we might not go for buys, and we might actually look for sell trades. So so that is the use of the higher time frame. The use of the mid time frame is setup analysis and intraday information. Now, what does this mean? Because our higher time frame analysis is a much broader time frame, and it takes into account a lot of previous days, previous weeks, previous months, the information won't be completely all relevant to the day that I'm about to execute a trade. So let's say, again, I'm on a Monday morning and I'm about to trade on Euro USD. I know that now my directional bias, so let's just keep this all here, is sells, because we tapped into a weekly level of supply, for example. When I move onto the middle time frame, I want to keep this information in my head, but I also want to be looking at what the middle time frame is telling me. So this is time frames like the 4 hour, the 1 minute, and the 30-minute. Why? Because for example, the 30-minute time frame will show me any sort of zones that I need to look out for. They will show me any recent break of structures or any recent change of characters, which can potentially confirm our bias, our directional bias from the higher time frame. So on this time frame, you're just looking to see if we can confirm the bias that we got from the directional bias and any other sort of intraday information or setup analysis that we can gain. For example, any recent breaker structures, any recent change in characters, so change in trend, any recent taps into fair value gaps or our other SMC zones, anything like that. So any sort of information that you can grab from the 30-minute or the 1 hour or the 4 hour to aid our directional bias or aid with our setup analysis, then make sure you mark up all of those things, because that is the use for the middle time frame. Then we move on to the lower time frame. And the lower time frame is all about entry confirmation and execution. We are in the lower time frame, we should already have our bias, our trend, our idea of whether we're going for buys or shorts. We should already be understanding whether we need to get a confirmation or not. Everything should already be sorted out. And on the lower time frame, all I'm looking to do is use an entry model, and then execute my trade. So all of the stuff with stop loss, take profit, entry price, limits, or execution, whatever it is, right? When we go, what we're basically doing here is we're basically setting up everything over here so that the minute we get to the lower time frame, all we have to do is look for the zone and enter, right? Because we've already gotten all the information from the relatively middle time frame and the relatively higher time frame. So because we have all of the information and the setup analysis from these time frames, it leaves us with little to no work on the lower time frame, because all we'd have to do at the lower time frame now is sorry about that. All we'd have to do now on the lower time frame is look for a entry confirmation and execute the trade, meaning to just put your SLTP and your entry. So this is what top-down analysis is about. And if we continued with this example that we had over here about the daily sales, and then we got our, for example, let's say on the middle time frame we had a change of character confirming these sales, then what we do on the lower time frame is we look for a 3-minute or a 5-minute or a 1-minute supply zone. We enter from that supply zone, and that is our trade. And we can use any other setup information for our TPs and our SLs and anything like that. So that is essentially what top-down analysis is all about. And you guys should be screenshotting this page and this page, because this is useful information for you to remember in case you're new to this topic of top-down analysis. Now, a pro tip is that the markets are fractal, meaning that patterns and trend behaviors displayed on the higher time frame is usually going to be displayed similarly on the lower time frame. So let's say on the weekly time frame or the daily time frame, we saw that price was previously bullish, and then we saw a change of character towards the downside after price tapped into a supply zone. When we move on, for example, to the 15-minute, so when we move on to over here, we may also see that on the 15-minute or the 5-minute time frame that price also was previously bullish, and we saw a recent change of character because we tapped into a, for example, a 1 hour supply zone. So you can see the patterns and the trend behaviors that we have on higher time frames is usually going to be displayed similarly on the lower time frames. And that is a very good sign. If you're seeing the market and the fractal nature of the market being displayed to you very clearly, then that is a good sign, and that you have a good trade, right? And that is why this is a pro tip. So always look out for the fractal nature of the market to help you throughout your trades. But yeah, guys, what we're going to do now is we're going to move on to some examples, and we're going to move on to analysis of a trade which I recently actually sent out as a signal to my team. And yeah, you guys can see on the screen right now that this trade was a successful trade. I think in total, if you got the re-entry, it was about 8 RR. So let's go onto the real life charts and break down the signal which I sent to my team. So I'll see you guys in just a sec. Okay, everyone, here I am on EURUSD. We're currently on the daily time frame. This is where we're going to start off the top-down analysis of that same signal which I sent to my group. So first things first is, on the daily, we're going to start off with understanding our directional bias, and we're going to keep a track here on the top right hand side of what is going on. So what can I see? I'm not going to zoom out all the way and analyze all of this because this is trading from 2022. I want to stay close. So this is another pro tip. Stay close to where you're trading. We only want to be analyzing the last sort of week or 2 weeks or so, right? So for the last couple of weeks, right, for example, November, we can see that we are in a consistent downtrend, right? And we are clearly filling up zones and gaps and fair value gaps and whatever within this zone so that it becomes a consistent downtrend. We are also breaking previous structures towards the downside, meaning that price is just getting lower and lower and lower, right? So we can confidently say that our sort of trend on the on a daily time frame is bearish. But let's take a closer look as to what's happening now. So right now, the last day of trading that we had was a small push towards the upside, and it was not a push where we could potentially see a reversal in the market, but more of a push into perhaps a level which is going to cause continuation towards the downside. Because when we have a downtrend, it's not, price doesn't just do this and just go down and down and down. No, price does this where it goes down, comes up a bit, goes down again, maybe comes up quite sharply, then goes down sharply, then again it builds up just to go down again. So what do we have here? These blue candles are the build up before going down. Again, build up before going down, build up before going down. So again, we have a bit of build up here towards the upside before going down. So the way I like to think of it is we are long-term bearish, but we will have small periods of bullishness. So we just saw a small period of bullishness, right? And now we're expecting a continuation of a downtrend. So let's try and see if we can find a zone which would cause this continuation of a downtrend. And I can see one right here, which is that we have these two wicks to conjoin, making a hidden SMC zone. If you guys want me to do a video on how to spot these, then make sure you leave it in the comments. But yeah, this is a zone that I know that usually appears on the higher time frame, which is a point of reversal sometimes for some trades. So what do I put here on the little diagram? The information box is that on the 1 day we have a bearish trend and a sell directional bias. So our bias right now is a selling bias, and that is confirmed because we can see a supply zone that price has tapped into on the daily time frame. We can see that right here. So where do we go now? Now we move down to the 4 hour. We don't go down to the 15-minute or the 1 hour or anything like that just yet. We just go down to the 4 hour time frame. What do we see on the 4 hour time frame? We see a much clearer version of the supply zone which we are talking about. We can see it very clearly right here that price is tapping into this 4 hour zone right here. So we can delete that 1 day zone as we've refined it down to this 4 hour zone. What else can we see on the 4 hour? We can see that we've recently swept through this level of equal highs, telling me that we are likely going to see a setup where price comes up, sweeps, taps into a zone, and then continues off towards the downside. So this zone is acting as a continuation zone. And what's a continuation zone? A continuation zone is a zone which continues the trend in the direction that it was already going. So I can just do that there, and we can see that we have a continuation zone. We also have this liquidity over here, which I'm going to mark up as well, telling me that we have a liquidity sweep, which supports our idea of sweep and then drop. So what can I add here to the information box is our bearish trend is confirmed. So again, bearish trend, I'll just write BT, comma. We're also going to add continuation zone. So I'm just going to write continuation, so con zone. We're also going to add liquidity sweep. Again, we're now just going to gather information which is going to help us as we move down the time frames. So now let's move on to the 1 hour time frame. And what do we see? So this replayed it back a bit. We'll just replay it forward. Okay, cool. So we can see again, the liquidity sweep is confirmed, but we also see this gap, right? Price has left us with a volume gap, which is very, very interesting, as this volume gap is significant because price, I found that in terms of probabilities, price 80% of the time will come down to fill in this volume gap. So whenever price opens and it leaves a large gap like this, 80% of the time price will not leave this behind. It will actually come and reverse into this level before going off in whatever direction it goes off. So we know that if we take any sells over here, we are expecting price to come down to at least this level. This is another crucial piece of information which is going to help us as we come down to executing this trade. So what can I say about the 1 hour information? I can say that we see the sell setup. So our selling confirmation, our sell bias is confirmed. So we have confirmation. We also see a volume gap. So I'll try vol gap, which can act as a potential TP for any later trades that we take. This is again another piece of information which is helping me shape my story for this trade. So now we can move down to the 10-minute time frame, and all we're looking now for is a zone to enter from, because we can see our continuation zone is part of the trend. We found an area for our TP. We saw the liquidity sweep helping the bias and giving us more confluence for this trade. So all of the stars are aligning and showing us that we should basically be telling a sell. Can you see how this process has made it so easy for us to understand what time to trade, when, what type of trade to take, and the biases and the confirmations necessary to take the trade? So now all I have to do on the lower time frame is find the zone. So we can see right here we have a supply zone. Just mark that up right there. We can see very clearly we have a supply zone. We can go to, for example, like the 1 minute time frame and make sure that we have a lower time frame change of character. I mean, we can see that this demand zone over here got taken out, but none of that is necessary because we're trading pro trend. So all I have to do now is go on the 10-minute time frame, find the zone which broke some sort of structure. So we can see we caused a break of structure over here, and yeah, now all we have to do is enter from here. And where does our TP go? Our TP goes right where we set that level of information on the 1 hour time frame where that volume gap is. Right. So what can I write for the information on the 10-minute? Sell entry from supply zone. And then yeah, we all know the TP is at the volume gap. And yeah, that's all that's necessary for the 10-minute time frame. If you wanted to not enter straight away from this and you instead wanted to see a change of character, then what you do is you wait for a change of character from a visible low which supports this trend. You wait for a change of character here, and then you do a re-entry. And I'm going to show you guys how you could have entered this trade through both of those ways. So let's start off with the first way. Okay, so price taps us into this trade. Our TPs remain here. Everything looks good so far. Continue on. Okay, here we can actually see a change of character as well. So this is again supporting our trade. So now that we get this change of character, if you wanted to, you can move your stop loss to break even and just hold this trade risk free. Or if you wanted to scale in another entry, we can see that you could have scaled in from, for example, from this fair value gap right here. We'll just put our TP SL at this high, and TPs can go there. So SL just about there, and our TPs can go there. And then yeah, so even if you wanted to get that change of character entry, then you also could have got that. Price taps us in, and these both run to an eventual TP, as you guys can see. Very, very beautiful trade, again, which was sent as a signal to my team. But regardless, you guys can see how all of our analysis was relevant to this trade. Because some of you may make the mistake of going onto the daily time frame and analyzing this sort of big trend that we have here. You will start thinking, oh, we have some fair value gap up here that price is going to come down to. We have a supply zone up here that price is going to come into. All of this is big analysis, right? And it's not relevant to what's happening over here. We need to zoom all the way in to get a better understanding of what's happening on a daily time frame. And if there's no relevant information on the daily time frame, then you just simply move on to something a bit lower. So you move on to the 8-hour time frame. See what you can see over there. You move on to the 4-hour time frame. Again, make a little information box and gather the information. We got a continuation zone. Our trend is definitely bearish. We move on to the 1 hour. We get the confirmation of the trend and of our bias. We see the volume gap, which helped us with our TP. We saw the liquidity sweep. Then we moved on to the 10-minute. What did we get? We got the entry. We got the change of character. And we got our scaling, so our double entry essentially. And it's as simple as that. Just this trade alone, so 4 RRs and 5 RRs, just this trade alone could have passed all of your challenges. It's just literally as simple as that. So yeah, guys, if you did enjoy this course video, then make sure you leave a like and a comment letting me know. And you know, if you guys have any other ideas for course videos, then make sure to let me know as well. If you guys are interested in getting your challenge pass, and if we don't pass it, then you don't pay a single penny and you get fully refunded. Make sure you check the first link in the bio to get involved. If you want to learn more about the way that I trade, then also check out the mentorship. But yeah, thank you all very much for watching, and I will see you in the next one.